The government has released the first estimate of GDP for FY26. The number is 7.4%. It's largely in line with what expectations were. But this, of course, also allows, everyone to kind of sort of project where GDP will be in the second half of this year. Latha is here to parse through the estimates and what it really means from a growth perspective, but also, obviously, these are the numbers on which the budget, which is the next big trigger, relies on to make its own projections, estimates, etc. Latha, take it away.
First, the number, the GDP for the full year is estimated by the MOSPI at 7.4%, obviously much better than last year's 6.5%. But let's get to the internals. The first half GDP, if you remember, was 8%. So if the full year average is 7.4, what the MOSPI is telling you is that the second half is going to slow to 6.8%. That's expected. The base is also higher. Now, where is the slowdown coming? Actually, very sadly, in consumption, according to the MOSPI. The full year FY26 consumption is seen at 7% versus 7.2% last year. And the second half consumption itself is seen slowing to 6.6% compared to 7.5% in the first half and compared to 7.1% year ago. Now, I'm a little puzzled by this. These are estimates. They can be wrong. But one always thought that the GST-related cuts, interest rate cuts, income tax cuts should all work in the second half. The MOSPI's estimates seem to indicate it's not a very big deal. I would worry about this. And, of course, they can be wrong. They were wrong last time also. The nice part, the best part of their estimates is investment, actually, what in jargon you call gross fixed capital formation, or GFCF. The investment is seen up 7.8% for the full year compared to only 7.1% last year. Again, let us take only second half. It is estimated at 8.1%. Very good number compared to an already high 7.6% in the first half and 7.4% year ago. Now, I just want you to dwell on this a bit. This is a very big estimate that they are giving at 8.1. We all know that the government front-loaded its capex in the first 6 months. And year ago, the capex was very weak in the first half because it was election months. In spite of it, they are telling you that the second half is going to be stronger than the first half. This means they are expecting private capex to pick up. This can't be only government, because government constitutes not even 10% of the overall investment of the country. And therefore, I would look at this. I wish they are true over here. This is a very strong forecast that they are giving. Now, let's come to the other smaller items. Exports are seen up 6.4 and imports 14.4 for the full year. Both are very good numbers. A good import number is good. It means industry is alive and kicking. Now, let's come to the sectors. Agri-industry, services. Agri and industry are seen slowing. Services are seen surging. Agri is slowing because it was a very strong base, coming in at 3.1% compared to 4.6% last year. That was to be expected. Nothing to brood. What is weak is actually power. Power has been weak one because the summer was not as strong. But even then, power and utilities 2.1% for the full year compared to 5.9% last year. And second half, one would expect that, industry should kick. But H2, the power is only 1.7%. This is actually power, utilities, gas, everything. But power is the big contributor. Only 1.7% growth. Again, that's something which I would worry a bit. Construction, again, construction is big also because it's a labor provider. Growing decently at 7%, but lower than last year's 9.4%. Second half, even lower at 6.7%. I would worry about that. Manufacturing, very strong. That's the part of industry which is doing very well. Growing at 7% compared to 4.5% last year. Even H2 slower at 5.7%, but still better than last year. Let's come to services. That's the best story. 9.1% overall compared to 7.2%. Already good 7.2% last year. Finance, public administration, defense, health, other professional services, like what you and I do, lawyers, doctors, all that growing very well. 9.9% compared to around 7 to 8%. I'm taking the entire set. So it's around 7 to 8% last year. This year overall is 9.9%. That's almost 10%. The sector which really pleases me, trade, hotels, transport and communications, it's a very big sector, very employment intensive, growing at a decent 7.5% compared to 6.1% year ago. Second half again seen at 7.1%. So I would still think services is really the shining story. I wish I could say the same thing about all of industry, but it's not that shining as far as industry is concerned. Now let's come to the budget implications. Nominal GDP is seen growing only by 8%. Nominal GDP is important for budget. It's seen growing only by 8%. Worrisome number, because taxes grow as per nominal GDP. Corporate EPSs grow as per nominal GDP. That at 8% is something I would worry about. This is the slowest nominal GDP I have reported, barring the COVID years. So it's a bit worrisome. However, it won't impact this year's budget. This year, the budget had assumed the GDP will be 356 trillion. According to the MOSPI, it is going to be 357 trillion. So fiscal deficit, none of that is impacted. But of course, on this base of 57 trillion, how much is the budget going to estimate the nominal GDP to grow? 8% this year. Will it be double digits? The economists I polled say double digits next year, 10%. One hopes it is.
Latha, thank you very much for that. And, certainly that is the hope, right? I mean, as we go through this year, some of what has been done towards the end of last year starts to show up, and growth, consumption, etc. does pick up.
Positive will be inflation, Prashant.
Yeah.
Because inflation won't be 1% and 1.2%.
Yeah.
If it comes in at 4%, then that itself will push up nominal
Nominal growth. Well,